Welcome to Next Round with the Pacific Research Institute. I'm your host, Rowena Ichon. In case you missed it, this week's podcast is a recently recorded webinar with Steve Moore, a member of President Trump's Economic Task Force. Steve chats with moderator PRI Senior Fellow Steve Hayward about the domestic policy implications from the 2020 election. Steve Moore offers his insights on what lies ahead for our nation amid the ongoing pandemic, civil unrest, and increasing political divide. Thanks for joining us.
Welcome. I'm Steve Hayward, Senior Fellow at Pacific Research Institute and occasional host of our policy webinar series. Today, our topic is what lies ahead, the policy implications of the 2020 election. And we're delighted to be joined by Stephen Moore, old friend of mine, provocateur, economist extraordinaire, one of the leaders of the supply side tax movement going back decades now, the founder of the Club for Growth back 15 years ago or more. And an advisor to President Trump on his tax cut package of 2017 and other matters, including some of the current economic challenges of the whole COVID business. So, Steve, I guess maybe I'll give you a general opening question. What a peculiar election. We thought either it was going to be Trump would hang on or it was going to be a blue wave and the Democrats were going to run the table. Instead, we got something in between, a narrow loss for Trump, apparently, and very good Republican strength below the presidential level. And as I know you pay close attention, in most places, tax increases like Illinois and here in California failed. Mm-hmm. So the opening question then is, what do you make of this scene? How are you sorting this out?
I think by the way, is a provocateur a good thing or a bad thing? I'm just teasing. I think of Paul Krugman as a provocateur. But anyway, it's great to be with you, Steve. Thanks for having me, and love PRI and the work that you all do. It's my number one takeaway from the election is it's still a conservative country, Steve. It really is. And you did not see that blue wave that the Democrats spent close to $1 billion to achieve. If anything, you saw a red wave. And I think there's no doubt about it. Obviously, I really, really wanted Donald Trump to win. And I've been depressed for a month about the fact that it looks like it's going to be Joe Biden. And I think that was a big mistake by voters, if that's the way it turns out. If Trump lost the election, which it looks like he did, he lost the election before election day, because what happened was a massive red wave on election day. And the irony of it, Steve, is that by that massive Republican turnout on election day, he was not able to save himself, but he saved a lot of Republicans around the country. And so just to give you some of these quick numbers, at the state level, in state races, state house races, Democrats spent hundreds of millions of dollars. There were typical races, Steve, that might cost, you run for a state delegate in a state like, Alabama or Pennsylvania, might cost $75,000, $80,000. The Democrats were spending $10 million on some of these races. And they're buying every single advertisement you could buy in the district for, 2 straight weeks. And in Texas, they spent $100 million. In Pennsylvania, they spent $50 million. That's a lot of money for state races. In Florida, they spent $75 million. And they lost ground in each one of those states. They lost seats. They didn't gain them. And so on balance, the latest number I saw was about 175 Republican pickups at the state level in House races and about 40 in the Senate, instead of the Democrats flipping state houses, which was their objective. The Republicans actually picked up 3 houses. So right now there are 31 states that have a Republican Senate, Republican House, and a Republican governor. And there are 18 states that have, the Democrat trifecta, and only one state, and this is pretty amazing. It tells you how divided we are, red state, blue state. There's only one state in the country that has a divided legislature. Do you know which one that is?
No.
Minnesota. Minnesota is the only one. So that's amazing result. Then in the House level, it looks like Republicans are going to have Democrats, Pelosi's going to have a surplus, a majority of about maybe 7 seats. And that means a pickup of something like 14 seats for Republicans. a month ago, or no, about 6-8 weeks ago, it looked like Republicans were going to lose 10 or 15 seats. So that's a huge swing. So on balance, it was good. And you mentioned finally those ballot initiatives. It was mostly good news. It wasn't entirely good news, but you're right on defeat in California was very positive. It was racial preferences went down, busing. What was the one? Rent control went down. The repeal of Proposition 13, which is something Democrats have wanted to do for 40 years, and they keep failing. And then we defeated a major tax increase that J.B. Pritzker in Illinois had on the ballot, which would have just massively raised the income tax rate. So that was good. Now we had some losses, Steve, and I'll mention a couple of those. There are three that really I was very disappointed in. One was that Arizona raised their income tax to 8%. And it was all out of state money. And it was, I think what happened there is Arizona is so prosperous. People thought, well, okay, we can have an 8%, tax rate, and so people got complacent. And then we lost in Florida, Steve, on the minimum wage. They raised the minimum wage to $15 an hour. And that scares me because I think you're going to see, these are all national groups that are initiating these. So, they're saying, okay, now that we've succeeded in Florida, we're going to do it in all these other states, and they're going to try to raise income tax rates in a lot of states. And the other one that I think you're not quite as concerned about as I am, or maybe I don't want to put words in your mouth. I am concerned about this Colorado initiative to do the, to get rid of the Electoral College. Do you think that's a threat, Steve?
I do. I'm more concerned about it now. When it first started bubbling up 10 years ago, I thought it wasn't going to go anywhere. Now I'm not so sure. I'm much more worried about that. Okay. Let me ask you one more political question before we...
Wait, can I just say one thing about the Electoral College? Because it may seem like a small issue, but just look at what happened in this election. If you want to see the ingeniousness of the Electoral College, I mean, it could have very easily come down to 2 or 3 electoral votes, one way or the other. It could have come down to that one seat in New Hampshire, or the 2-3 seats in New Hampshire, or the one seat in Maine, because Maine has that weird system. And, who's going to win that one seat we need in Nebraska? So the whole idea of the Electoral College was to put the power in the states and make these smaller states relevant. And we saw, so that it wasn't all dominated by California, New York, and Texas. And we really saw that in this election, that these small states really mattered.
Yeah, that's right. So one more political question before I turn directly to economic policy, although there's a political dimension to that. You remember 10 years ago when Democrats had a large majority in the House and Senate, and they struggled to get Obamacare passed and didn't get very much else passed. And so I'm looking at the situation now with the very narrow margin in the House. And even if Democrats were to win both Senate seats in the runoff in Georgia next month and make it 50-50, it seems to me that Joe Biden's very aggressive tax increases for income tax, estate tax, corporate income taxes, and other things is pretty much dead on arrival, isn't it? How do you size up the probabilities there, regardless of how Georgia goes?
Well, I think Georgia matters a lot. I mean, I do think it's going to matter a lot whether the Republicans have a 2-seat majority or the Democrats with the tiebreaker have the 1-seat majority. So let's assume for a minute Republicans win one of those 2 Georgia seats, which I think is not a slam dunk, but I think it's likely. Then, Mitch McConnell's good at playing defense. he's good at playing defense. And so I think it'll be difficult for, the Democrats to get their radical agenda through. And they have a radical agenda. I mean, if they had a big majority, they would make Washington, D.C. the 51st state, Puerto Rico the 52nd state. They would pack the Supreme Court. They would end the filibuster. They would raise taxes. They would, pass, their version of a Green New Deal, maybe watered down. But these people are serious. I mean, they're not fooling around. And so it is important that Republicans retain the majority. And that's an economic thing, too. I think people keep asking me, why is Wall Street just joyous over this election? And the answer is because they thought it was going to be a blue wave. And all of a sudden it wasn't a blue wave. And that there was a big, Wall Street likes divided government. And the historical record shows that the stock market does pretty well with divided government. And so now let's assume for a minute that the Democrats win both of those seats. Then it's still going to be, you're right, Steve, it's still going to be hard for the Democrats to do anything really radical, but even passing a tax increase would be tough for them, and it's certainly not the massive tax increase that they would like to see. And so you are going to see some gridlock, and a gridlock right now would be a good thing.
Yeah, I always like to say that gridlock is the next best thing to having constitutional government, or a more serious variation of that is that divided government has, for a lot of voters, I think, replaced the separation of powers. And I think that's going to be on the mind of a critical mass of voters in Georgia. I hope, anyway.
I agree with that.
Yeah, I do want to ask about Wall Street. I'll come back to that. I want to turn to economics a little bit. First, let's do a couple of general things and then look more specifically at Biden's prospective economic team that he's announced. You'll be more familiar with some of these names than I am, like Brian Deese, who was announced today to be head of his National Economic Council. But first, I want to connect the question of tax increases of whatever size is still proposed. The other big thing on the left, as you well know these days, is what they call modern monetary theory, which looks like old-fashioned Keynesianism to me under a new cereal box. And basic theory is you can borrow as much as you want when it's your own currency and interest rates are low. So the two-part question is I think I know what the answer is going to be generally, is what do we make of this theory? And second, if they're really serious about being able to borrow all the money you want, why would you raise any taxes at all?
You're asking a tough question here, Steve. I mean, I've really been, I've been wrestling with this myself. And by the way, I don't think modern monetary theory is crazy, believe it or not. I mean, I think there is something to it, that we do have low interest rates. And when you have low interest rates, the cost of borrowing is lower. So, it's one thing to borrow when you have a 10% interest rate. It's another when, countries are willing to lend us money for, right now, the 30-year treasury bill. I mean, it's the most perplexing thing I've ever seen in my life.
Me too.
Everybody's buying 30-year treasury, not everybody, but, institutional investors and the Fed is buying a lot of this debt too. The last time I checked, it's like 1.7% rate. I mean, is that crazy or what? I mean, who would buy a 30-year treasury bill at a 1.7% interest rate? I mean, that means that you're making a bet that over the next 30 years, inflation is going to be less than 1.7%.
Yeah.
Do I believe that's going to happen? Hell no, I don't. But who am I to argue with the market, right? I mean, the market is telling us that there's no perception of any kind of inflation whatsoever over the 10-year treasury bills are like 1%, 1%. So, I do think that means we do have an opportunity to borrow at low cost. And my point of view is it depends on what you're borrowing for, right? If you're borrowing for something that has a high return, then maybe we should borrow. And I do think something of this idea that, as long as they're going to keep doing it until the market says we're not going to allow you to do it anymore. Now, do I think it makes sense to borrow for a $1 trillion Green New Deal? Hell no. I mean, that is a negative return, not a positive return. Do I think it makes sense to borrow $1 trillion for Medicare for all? No, that's a negative return for the economy. Would I borrow $1 trillion to have a flat tax? Yeah, that might make sense. It might have a higher return. Just like a lot of people listen to the show are investment people. You judge what's the cost of borrowing the money versus what's the return you think you're going to get on it. I'll tell you, another one, if we could actually use these low interest rates to borrow to transition to a fully funded private retirement system under Social Security, that might be a good thing to do, to finally get out of this pay-as-you-go system into a fully funded thing where young people can put money into the market. So what I'm saying is that it's not a totally crazy idea, but what the left is missing is they say, oh, this means we can go out and spend whatever we want to. Well, no, you don't want to spend money on things that are a waste of money. You want to be smart about what you're investing in.
Yeah, I mean, right. I think I completely agree with virtually all of that. With the caveat, of course, this is to say what you said in different words, that it's a highly convenient doctrine for a big spending party that wants to spend on consumption and redistribution and so forth. But the follow-up question is, that's
what's dangerous about it, right? Because it becomes, I think you used the word invitation. I think that's a good way to put it. It gives them an economic rationale for spending money. And just like Keynesianism in the 1930s was an economic rationale for spending money and wasting it.
Well, so something I've been scratching about my head over for a whole decade now is that when we had the financial crisis of 08, 09, and the Federal Reserve essentially adopted ZIRP, we call it, right? Zero interest rate policy. And, we finally raised rates a little bit around 14, 15, I forget. And now we're back to zero interest rates, essentially, short-term and intermediate term for the foreseeable future. And, you've seen what the Fed balance sheet looks like. It's exploded. And I thought 10 years ago, well, surely we're going to see some inflation out of this. And we haven't seen it. And, Milton Friedman's no longer with us. You and I both knew him well. And, my old basic understanding of monetarism is that this kind of monetary expansion has to generate some inflation, and it hasn't. Is it just that the banks are, and what's your theory on this? Is it just the banks have soaked up the reserves? Velocity's way down? Is there something else happening in the world that is escape? I don't understand what's going on. Maybe you can help me out here.
It's just perplexing, and I very, very rarely admit when I'm wrong, but I've been wrong on inflation. I did predict, when I was up for Federal Reserve, nomination, a lot of, people said, well, you predicted inflation, and I did, and I was wrong. So where are we now? We're in this very strange world right now where, let me say one thing about inflation. I think two things have happened in the world that have dramatically reduced inflation, which is price levels, technology and trade. And technology and trade both the reason they make everything more affordable, right? I can get on this phone. I have more computing power than most mega computers had 20 years ago. So those dramatically reduce the costs of producing everything, and that's a good thing. That's a very good thing. So that's why international trade and why technological improvements are so important. And I think they are factors that just continue to drive down prices in a very, very prosperity creating way. But that doesn't mean inflation is gone forever, and I do think but right now, this may surprise you. I'm more worried about deflation right now than inflation, because I'm looking at, one of the points I made when I was up for Fed secretary, when I'm being on the Fed was, I do like to look at prices. I think that the Fed should be, not making up as they go along. They should have some kind of system, rules-based. I'm in favor of a rules-based monetary system, and that's like putting a cross in front of a vampire to the left. But I like to look at commodity prices. Well, Steve, commodity prices are incredibly low right now, and they've been creeping up a little bit, but they're still way, way below where they were 2 years ago. And low commodity prices are harmful just as high commodity prices can be. So I'm of the attitude that we need maybe a little bit more money into the economy right now to make sure we don't face deflation, because deflation can have as negative consequences as inflation can. Now, what worries me about the Fed, and the Fed is always a boring topic for people, but what worries me is what the Wall Street Journal has been worrying about, which is the Fed is becoming a commercial banker. And that, think about the implications of that. The Fed is going to loan money to Los Angeles. The Fed is going to loan, money to Chicago. Illinois just, went to the Federal Reserve window for another $2 billion to balance their budget. The Fed is going to determine what company they might start lending money to companies and buying the debt of companies. I think that's really dangerous, because then you start to see the Fed becoming the world's largest commercial bank. And that's way outside of their charter.
Yeah. We both mentioned Milton Friedman and how strange this is. There's one other name should be mentioned. I'll come to in a second. But if you had told me 40 years ago when Ronald Reagan was elected, that 40 years out, we'd have not so much here, but overseas in Europe, negative interest rates. Never mind 1.7% on a 30-year bond, but actual negative interest rates in Germany and Switzerland and certain other places. And that the inflation-adjusted price of oil would be, $6 a barrel or whatever it translates to from 1982 today, I would have said, that's crazy. That's some kind of parallel universe from science fiction. And yet here we are. And that brings me to the other name. In addition to Milton Friedman, who I wish we had to offer us his usual clarity, the other person who might not be surprised about any of this is, of course, your mentor and my hero, Julian Simon, right? He would have predicted all this, I think.
Yeah, well, because over time, his thesis was the ultimate resource of the human mind. When I talk about technology, the technology revolution, which really is, the most incredible thing that, ever, it happened because of ingenuity, mostly American ingenuity. And, I'm troubled by some of the right-wing attacks against these technology companies, frankly. Google. I mean, when I first came to Washington, my first job, this was in 1983 or so, I had a pass to get into the stacks at the Library of Congress, which was kind of fun, actually. But I spent all my days looking up stuff in the Library of Congress. I'd spend 3 hours trying to find a data point. I can go on my computer right now in 30 seconds and find that data point. I can go on Google and I find almost anything, more information that's available in the Library of Congress. Maybe I'm exaggerating a little bit, and it costs me nothing. It's free. It's free. So why are we attacking our do I like the political leanings of these big tech companies like Google and Facebook? And so, no, I don't even have a Facebook account because I hate Facebook. But I am a little troubled by the right-wing attacks against companies that are, oh my God, they're trillion-dollar companies. Well, guess who owns them? We all do. Would we be better off if it was a Chinese company? So that's something I'm a little concerned about. And by the way, I'm sure that some of my best friends are on the other side on this issue. So it's one of these issues that divides the conservative movement right now.
Yeah, I think this is a subject we should take up some other day. But yeah, the
it's been on my mind, so I wanted to get it out there.
No, that's fine. I think you're right, though. The antitrust theories being put out right now are not very coherent, but that's a long subject. Well, now you did say worry about deflation. I understand that. I know a lot of people whose opinion on this I trust implicitly. I have the same worry. Maybe we need more money. On the other hand, and by the way, let me stop here with a brief digression that I neglected in my introduction to talk about the Committee to Unleash Prosperity that you helped found. And you have your daily newsletter that I read, and viewers should sign up to get the daily newsletter. Committee to Unleash Prosperity if you're not. I think, what's the website, Steve? Do a quick commercial.
Committee to Unleash Prosperity. And then, all you have to do is just click the button to because you just need to sign up for it. It's free, but you need to actually affirmatively sign up for it. And we'd love to get, as many folks to, it's just something you can read in 5 minutes. I got a note the other day from Newt Gingrich saying it's the first thing I read every morning. So it's, just a short bullet points about some of the things that we had a nice item today, Steve, since you're there in California. I don't know if you've been following this about the what's happening in Los Angeles. It's an amazing story. It's really you can't make this stuff up. I mean, she's the health director. She doesn't even she knows nothing about health. She's a social worker, and she's closed down the restaurants, even outdoor dining. For those of you who haven't been following this, which is, I can see an argument for shutting down indoor dining. I'm not in favor of that, but I can see an argument for that. But shutting down outdoor dining with social distancing is preposterous. And she's, I'm following the science. Well, it turns out she didn't even read the CDC study she cited wrongly. And here's the other thing. You know how much money she gets paid?
Oh, I don't even want to know. I know it's
$400,000 a year.
Yeah.
400. I think that's more than the president of the United States makes. I mean, God, it's now I understand why California is broke.
I thought you were going to mention the story. Yeah, by the way, I mean, closing outdoor dining here in California, where it's still 70 degrees some days, is, it's one thing you don't need to close outdoor dining in Minnesota right now, but California, we can still eat out. Okay. I thought you were going to mention a story I think you had, maybe it was yesterday's bulletin, about how California had paid out, what was the figure?
The prisoners.
Unemployment.
400 million, I think it is.
Criminals.
400
including
million.
Some people on death row. I mean, talk about incompetence.
Well, but it just shows that, it's not just California. There's so much waste in these government programs, and California is, probably at the top of the heap. Well,
I want to go back to your earlier point, which I was following up too slowly, which is maybe we need more stimulus. I'm not sure that's the phrase you'd use. And yet your bulletin yesterday says, wait a minute, even this $900 billion stimulus that has been the compromise bill, cut in half from what Democrats wanted before the election when they thought they were going to win. You say that's too extravagant or too wasteful. And so I'll be provocative and say it this way. I'm a little confused here. You think we may need more monetary stimulus, but you don't like the proposals that Congress is generating. So explain why.
Well, there's a difference between a monetary stimulus and government spending. I mean, the way to get money into the economy is through the Fed, not by having the government spend money on wasteful things. Let's just start with the very basics here. I mean, this is a really important point that even a lot of my Republicans friends in Congress seem to have just, lost this point. Government spending doesn't stimulate anything except government, right? I mean, Art Laffer and Milton Friedman and the rest have always taught us, Steve, the only way the government can give you $1 is to take $1 away from me. I mean, it's very simple. It's not like there's some pixie dust and somehow there's a magic money out there. All you're doing when the government spends money is taking away money from productive people, and in most cases, giving it to less productive people. So we should never agree to this idea of Keynesian stimulus. It doesn't work. Economics is about incentives. That's point number one. Point number two, we don't need a stimulus. Look, the economy is really, under the circumstances, doing incredibly well. We just got new numbers this morning on the unemployment insurance claims. They came down again, which I was actually surprised about because a lot of states are closing down again. You would think more people would be signing up for unemployment benefits. Just to give you a sense of how improbable this recovery has been, the unemployment rate, according to all the experts 6 months ago, they were predicting the unemployment rate would be 12%. 12%. It's going to be 6.8% or thereabouts tomorrow. 6.8% instead of 12. That's a pretty big error, to get it that wrong. And it happened in spite of the fact that Trump did not, he did not agree to the $3 trillion stimulus bill. And yet we still got this massive growth. So, the GDP grew by 33% in the third quarter. Steve, do you know what the latest estimate is from the Atlanta Federal Reserve for the fourth quarter?
I know you had it yesterday, but I didn't absorb it though. So
it's about 10 or 11%.
Yeah.
I mean, how do you need a stimulus on top of that? All we need to do is get the government the hell out of the way. And the stimulus is this is a point I made on Box yesterday. The stimulus is the vaccine. That's the stimulus to the economy. Once we get this vaccine out there, we're going to see, businesses get back to normal. And as long as Biden doesn't screw things up, I think we could have a strong 2021. I mean, that's, I think, the real tragedy of Trump not winning this election, because I think 21 was being really set up to be a blockbuster year. Let me just say one other quick thing, Steve. How in the world is it that Britain has access to this vaccine before we do? I mean, it is the most outrageous thing. We have an item in our hotline today about this. And it's infuriating. It should be infuriating to the American people. We developed it. It was American companies, American laboratories. It was America's, warp speed project under Trump. And we've developed this, and Britain has approved it before we have. And here's another little sidelight, really interesting point. You probably haven't read the hotline today because it just got sent out a few minutes ago. You know what was one of the things that enabled Britain to approve this vaccine?
Tell us.
Brexit.
Oh, right.
Because it turns out if they were still part of the EU, they would be under that regulatory regime in Brussels. And guess what? They're sitting on their pants doing nothing. So it's another example of why Brexit was such a great thing.
Oh, yeah. No, I've been wondering myself why the FDA committee to approve all this is not meeting for another week. I mean,
it's December. I think it's something like that. December 10, I think it is.
Right. I don't get that either. There's a lot of things I don't. Well, of course.
Well, they're too busy. They can't meet right now,
You said well, right. That's another topic, a long topic for another day. You had a clause a moment ago I want to return to and then expand, which was we're poised for a great economic recovery and expansion if Biden doesn't screw things up. So let's spend some time on the prospects of that. Given the fact that there's going to be, looks like gridlock in Congress, aside from that, what are your biggest policy worries right now from the prospectively incoming Biden administration?
Oh, I don't think there's any doubt that it's the the obsession with radical climate change. I have to say it's just really troubling to me that we have one of the worst health pandemics in 100 years. We have still millions of people unemployed. We've got crime. We've got riotings. That have happened in our major cities. We've got so many problems in this country. We've got $3 trillion budget deficit. And Joe Biden says that his top priority is climate change. I mean, really? Come on, that's a derangement to say in the midst of all of these other problems that we have to worry about climate change. And I don't even care what your position is on it. It just isn't the most immediate problem for the country. And so, but boy, just look at the people they're bringing in. They are true believers. You mentioned this guy. I don't know him very well either. Deese, or what's his name?
Brian Deese, right? Yeah.
I don't know much about him, but what I've read about him, I've never met him personally. He's a big climate change guy. And that's the other interesting thing is the economics people that they're bringing in are climate change people. And so I think this is going to be a top priority. People used to ask me all the time during the campaign, do you think that President Joe Biden would outlaw fracking? And I said, no, he's not going to outlaw fracking. He doesn't have to. They're going to do to the fracking industry what they did to coal. They're just going to strangle it with regulations that make it so expensive, just as they made mining so expensive, producing coal so expensive. They've wrecked half of that industry. They're going to do the same thing, I think, with the oil and gas industry.
Yeah, I think that sounds right. And then lots of subsidies or mandates, and they'll try and bring back Obama's clean power plan, even though there were some legal problems with all that. So, and rejoin Paris, which actually I kind of thought that John Kerry as the climate envoy was kind of a gift to us because he's such a ridiculous person. And maybe I thought he's a lightning rod. All these people we don't know as well are going to be, that's actually Janet Yellen for Treasury. I mean, I don't know. That's, at least it's not Elizabeth Warren, but what else should be said about her as the Treasury Secretary?
I'm not too troubled by her. Of all the people that he's appointed, I think she's the most reasonable. Wall Street likes her. She will be attentive to Wall Street, which is good, because that will. So I think Janet Yellen will be fine, but she is a big fan of a carbon tax, and she's a pretty traditional Keynesian. But that's the best you're going to get. I mean, all the Democrats are Keynesian. So, but at least she's level-headed. I like her personally.
Yeah. Okay. I think I've heard that, what's his name? Jared Bernstein is back in the mix. Maybe. I think I've heard that.
I know Jared. I mean, Jared is, he's a sociologist that's now on the board of the Council of Economic Advisors. So, Jared's he's the one who he did the famous models. Remember, Steve, under Obama, that for every dollar we were going to spend on that stimulus bill, we were going to get like $1.50 or something, $2. I forget what the number was. And they had these projections of just massive job creation. That was Jared Bernstein. I mean, he just basically, all they did was just plug in a multiplier, and they just made up a multiplier number. And then, the math is easy then. If you put in the right garbage, you get the garbage out. So that's his claim to fame, And by the way, you all know that that was the shovel-ready stimulus that didn't create any jobs.
Right. Yeah.
Well, he's back. That's the other thing about Washington. It doesn't matter how many times you're wrong, you can still be elevated to higher and higher positions in Washington. That's the other thing that's going on here, Steve, is that what you're seeing now is kind of there's no question, this is basically Obama's third term, what we're seeing right now. But what you're seeing, the B team, the A team people have left. So now it's just the deep state people are rising up, and you've got, the same Obama people, just not quite as competent and talented.
Yeah. So, that's right. That's a third term for Obama. And DC, Mike, I'll add my comment, which is Washington is more so than any place else in the world where you fail upward. That explains President Biden.
It's so true.
Yep. He's been around forever. And if you were, I'm going to ask you a few questions about tax reform, because that's really in your bailiwick. If we'd had a second term of Trump, or even without that, if just Stephen Moore gets up on a blackboard and outlines what further tax changes you think should be made in the interest of better growth and so forth, what would they be? What would the agenda be for a sensible tax policy changes from here?
Well, I've always been a flat tax guy, and I've always thought that would just be the most sensible system of getting rid of, as many of the deductions. It's interesting because, 30 years ago or so, which wasn't that so long ago, there was pretty much a consensus. Even among Democrats that, you want a system that has the lowest rates possible and a broad base. I'll give you an amazing statistic, Steve, that I think will blow people away. That in 1986, Reagan had his tax reform bill, and it lowered the top income tax rate to 28%. 28%. Do you know what that passed by in the United States Senate? 97-3.
Yeah.
And the three no's were Republicans, so, that was a bill that Howard Metzenbaum and, Ted Kennedy and, Al Gore. And I think was Joe Biden in the Senate in 1986? I think.
Yeah, he was in the Senate. So was John Kerry.
I think he voted for it. So, that gives you a sense, doesn't it, of how far the Democratic Party has moved. They have zero interest in lower tax rates now. They don't believe that. By the way, the co-sponsor of that bill was Bill Bradley. And it was the Bradley-Kemp bill. And Bradley said, look, get rid of the loopholes and lower the rates. Who's against that? They have no interest in lowering rates. All they want to do is raise rates. And, it's troubling to me because I think one of the biggest lessons of the last 40 years, beginning with Reagan, is low tax rates are the goal. That's why all these countries are lowering tax rates. Good things happen when you cut rates. So we were really proud of our record. I'm very troubled by the obsession by the Biden people to repeal the Trump tax cut because, they keep talking about science. Okay, we had a scientific experiment. We cut tax rates. They said it wouldn't work. We said it would. They said it wouldn't raise wages. We said it would. They said it wouldn't bring in foreign capital. We said it would. And so we did the experiment, and all the things we said would happen did happen, and they still want to repeal it. That's just that's ideology over science.
Yeah. So I had a couple more questions on that line. One of them is, we don't need to spend a lot of time on this, but it illustrates a larger point, which is one of the things the left is demanding is that Biden, by executive order, forgive something like $50,000 in student loan debt. And even the Brookings Institution has done an analysis, and the Urban Institute, that 80% of the benefits will go to upper middle income and upper income households. So that's redistribution of wealth upward, which is supposed to be what liberals are against. And that's back to the tax question. They want to bring back the state and local tax deduction that the Trump tax cut greatly reduced. That was my favorite part of it, by the way. But that also benefits rich people in blue states with high state income tax rates. So what's going on here? They talk this progressive line like egalitarians and redistributionists, but in practice, all their redistribution seems to go up.
They are really obsessed with bringing back that state and local tax deduction. And one of my few real contributions was I fought like a dog to make sure that they kept that, because even some Republicans wanted to get rid of that. And this was one of the best features of the bill, because what was happening before is, California could have a 13% tax rate and the rich people could just deduct 40% of it. So basically what was happening is people from other states were effectively subsidizing the big budgets of California. And look, I'm a federalist. If California wants 13% tax rates and bloated budgets and, have at it, but don't expect people from other states to pay for it. And so now, when California has a 13% tax rate, the full 13% has to be paid by people in California. And of course, that has accelerated the migration out of California and my home state of Illinois and New York. And those high tax states are really suffering as a result. And the irony, of course, is the liberals understand that this is incentivizing people to leave. And so they've been the same people who've argued for 50 years, tax rates don't matter. Well, if they don't matter, why are people leaving? So they've got a contradiction there, but it's going to be really difficult for them to get that done because, the top 1% get 60% of the, it would be the biggest tax cut for rich people in the history of the United States. Wouldn't that be ironic if Joe Biden signed the biggest tax cut for rich people? By the way, the benefit to rich people in like California of getting rid of the state and bringing back the state and local tax deduction is greater than even the increase in the tax rates. So on balance, rich people, even if you raise the tax rates, come out better in California under that bill than they wouldn't. So it's the tax cut for Zuckerberg and Bloomberg and people like that, which is why I think in the end they're going to have a hard time bringing that back.
You know, I've noticed that to her credit, and it's pretty rare that I would ever say this, and probably you too, Alexandria Ocasio-Cortez is against repealing.
Oh, see? Well, that's because she doesn't understand economics. She really doesn't think taxes matter.
Well, we saw that with the whole Amazon debacle. I mean, she may buckle under if Nancy Pelosi, glares at her. I don't know. But this brings me to a socioeconomic question I've been wanting to ask you for a long time. We've never had time to talk about it. You mentioned that the stock market right now is booming because they like gridlock. On the other hand, two data points to ponder and explain to us. One is, Wall Street's campaign contributions went heavily to Biden and the Democrats. Now, maybe you can say they were paying protection money, worried about a blue wave. I can understand that. On the other hand, I've got up on my other computer screen here a chart that's easy to explain. I'm not going to try and show it. And the one chart is the presidential vote in the 100 wealthiest counties in the country going back to 1980. So every 4 years.
Yeah, that came from we had that in our newsletter the other day. So.
Maybe that's where I got it from.
Yeah.
So you know the numbers. In 1980, of the 100 wealthiest counties, 76 of them voted for Ronald Reagan.
Yeah.
In this election, only 16 of those 100 counties voted for Donald Trump. And the trend has been moving that way with only a little bit of variation for those 40 years. So there's two forms of this question. Thomas Frank famously said, "What's the matter with Kansas?" Yeah. Which was a cultural thing, kind of idiotic. I always wanted to say, "What's wrong with the Upper West Side?" My new form of it is, what's wrong with Wall Street and what's wrong with rich people?
Well, this is a big deal. This is a big political phenomenon that's been going on now for 30 years. And, my whole thing about Trumpism is that Trumpism was really a middle class, working class movement. Whether you agree with what, Trump, we all have disagreements with some of the things Trump stood for, but these were, very, middle class, blue collar worker issues, whether it, stop illegal immigration, the trade. And I'm a free trade guy, but, I have to tell you, Ohio, Pennsylvania, Michigan, the idea of, getting tough on China and things like that, that they do blame trade, rightly or wrongly, for losing the factory in Yorktown or whatever town it might be. And so Trump really, changed the Republican Party into a working class party. I got to tell you, Steve, I went out 3 or 4 weeks before the election to one of the Pennsylvania rallies. It was the most incredible thing I've ever seen. It was a town of 50,000 people, and 100,000 people showed up. And where did all these people come from? And they were all in pickup trucks. And they had the guns in the backs. These were your classic rural Americans that love Trump. And they treated him like he was Mick Jagger. It was just unbelievable, the adoration they had for Trump. And this was a rural versus urban vote. Democrats now represent totally the urban areas and the suburbs, and outside of the suburbs, not as many people out there. It's like totally Republican territory. And so, that is something to keep an eye on. Democrats keep saying they're the party of the working class, but the working class doesn't like their agenda, both culturally and economically. Where Trump got beat, these numbers are just kind of interesting. Pennsylvania is an interesting one. I always said from day one, whoever wins Pennsylvania is going to win the election. It was so razor tight in Pennsylvania. And I do think there was a lot of voter fraud in Pennsylvania, although I don't have the proof of it, but we have anecdotal evidence. But it's interesting. Trump did slightly better in Philadelphia than he did in 2006, slightly. But you know where he got creamed? In the wealthy suburbs. Well, he just got creamed. So that's exactly what you're talking about, Steve. In terms of Wall Street, you shouldn't ask me about Wall Street, because about 6 weeks ago, I pulled all my money out of the stock market. And ever since then, it's just gone up through the roof. But I'm pretty bearish right now, actually. I'm not optimistic about the Biden. I think people have underestimated how much damage these people can do. And the problem is, we can stop things, Steve, but it really means for the next 4 years, nothing good is going to come out of Biden. And so I just don't, can you point to anything, Steve, any single thing that Joe Biden wants to do that's good for the economy?
No, it's pretty hard. Not in this century. You mentioned he voted for tax cuts many times in the 70s and 80s.
But I mean, in terms of what he's saying he wants to do now, I mean, I've read through the whole 96-page report. I mean, there's not anything in there that's good. It's all bad. Yeah. There's degrees of badness, but there's nothing that's pro-growth. I mean, he's against school choice. That's one of the tragedies of this election is I think if Trump wins, and if he had won, I think school choice would have been one of his top priorities, which I think is one of the most important. And PRA has done some amazing work on that issue. And what a tragedy. I mean, this administration is being run by the teachers' unions. There's no question about it. And the children will really suffer.
Yeah. I mean, on that Wall Street question, one last footnote, NASDAQ in the last few days has announced these potential rules for diversity on the membership of corporate boards. Now that's, NASDAQ's a private organization. Wait till the Securities Exchange Commission and the Commodities Futures Trading Commission and other people start making rules for corporations that go well beyond board composition. I could see a lot of that coming out of the Biden administration.
There's a great the second editorial today in the Wall Street Journal. I just read it right before we came on. It's on this very subject. And, they talk about how Warren Buffett, if you haven't read that editorial, it's called NASDAQ versus Warren Buffett. And Warren Buffett said, the principles that I look at when I buy a company is who are the board members? Do they know anything about business?
Yeah. Let me turn back to a public finance question that's coming in from one of our listeners. And that is, it looked like, it may still look this way, I'm not sure about this, that the amount of revenue hit to states and local governments from the COVID lockdowns and the economic collapse of the spring, Mark Zandi and others thought it was going to be huge. And now maybe it looks like it's not as big. So A, what do you think? How do you size it up? And B, are there good data sources to try and track all
that? So I'll just answer it that broadly. I mean, my latest big project, Steve, is this book on the red state, blue state thing. Because I think it's the most important thing that's going on in America is the growing, Joe Biden keeps running around the country. I don't believe in blue state, red state. We're one America. It's like nonsense. No, there is a red state, a blue state phenomenon. We saw it in the election. I mentioned those numbers at the outset about, 31 states have all Republican control of their legislature. 18 of them have all Democrat. I mean, we're becoming more divergent between red and blue states, not less so. It's not just a political and economic phenomenon, it's also cultural. And so the idea of a blue state bailout is something, we've really our group has made a big, no, hell no. Are we going to why should people in Utah and Texas and Tennessee and Georgia that have balanced their budgets have to pay more federal taxes to bail out, states like California and New York? It just isn't, it's not fair. It's not good economics. It's not good politics. And so right now just look at the latest state unemployment rates. There are 15 states right now that have unemployment rates of less than 6%. That's pretty close to full employment. I mean, when you're down to 5.8, I think in Nebraska, the unemployment rate is 3%. So they have a worker shortage in Nebraska. My point is there are a lot of places in the country that are very healthy. They've weathered the storm. There are 8 states that have budget surpluses this year. They weathered the storm. They made the cuts that needed to be made. Has California made any cuts? Of course not. Illinois, where I'm from, this is laughable. And the California, Illinois obviously is just a fraction of as big as, but it's a big state, but it's not obviously only a fraction of California. But, they have a $6 billion gap between their revenues and their spending. So they just put an asterisk in their budget, $6 billion, that money is going to come from the federal government. Well, good luck. Good luck. So we don't want to bail out these states. As I said, I believe in federalism. If your governor and your state lawmakers want to shut down your government, you elected those people. I think one of the smartest things Trump did at the beginning of this pandemic, and I give him a lot of credit, is we did not have we had some national guidelines, but he basically said states are going to take the lead on this. And that was smart. That's federalism. And guess what? Some states use very different approaches. You had 8 states that never shut down anything, nothing. And, there's an attitude on the East Coast, especially, that New York is the country.
Yeah.
Right, because that's where the media is now. Well, look, maybe shutting down New York City makes sense, but it never made any sense to shut down Nebraska, right? So I'm very opposed to any kind of blue state bailout. I don't know the exact numbers, but I do know that there are many states that have balanced their budgets and they've weathered the storm, and they're almost all red states. You've got a few blue states that have acted responsibly. And that's kind of the story. If people want more information, go to alec.com. That's a group that we support, as you know, Steve, and they do really good work. And so that's cool.
Well, I was going to put in a plug for your red states, blue states report that you've been doing for several years through ALEC. And by the way, I think that divide's going to grow also. And you
know what the number one state is?
No, what? I was going to ask you the number one state.
Oh, you know.
Texas.
No, guess again.
Florida.
What? You said Texas? No, guess again.
Florida?
No. Come on, you know this one.
Kansas? I don't actually. I should know.
Utah.
Oh, yeah, of course. Yeah.
We have done this report for 13 straight years in Utah. By the way, Utah is going to explode. I mean, Utah, I do actually think one of the repercussions of this election is you're going to see the people leaving the blue states is going to accelerate, and they're going to go to states like, and I mean, Florida and Texas are filling up pretty quickly, but I think the hidden gems are states like Utah. It's one of the most beautiful states in the country, nicest people in the world, has the youngest population in the country is in Utah because Mormons have a lot of kids, and they're pro-business, great environment there. The other country do you watch the show Yellowstone?
I haven't. I mean to at some point.
If people haven't watched it, it's really quite good with Kevin Costner. But ever since that's become like one of the top movies or miniseries on Netflix. And guess what? Now everybody's moving to Montana.
So I have friends in Bozeman, as you do, and real estate prices are soaring. And that'd be I don't know, it may be tricky to do, but it might be interesting for you guys in your red states, blue states to track housing prices relative to the other.
Yeah. Speaking of housing, let me make another quick point, since we're just having some fun here. So we're working on this project now on coastal housing prices, in places like Florida. And do you think that they're falling in price?
Here in California, they're kind of flat, at least. I don't know about Florida. They're probably going up.
They're rising. So how is it that if all these places are going to be underwater in 20 years, that the prices are rising? And it's, one of the things that I'm working on just to give people some food for thought, because I'd like people's input on this is, let's use market pricing to determine. In other words, how should we determine whether climate change is going to destroy Florida? Would you believe a bunch of scientists, or would you believe what the market is saying? And the market is not signaling, we think that Fort Lauderdale is going to be underwater in 20 years. But USA Today had a big story the other day, front page, Florida's going to be underwater in 20 years. Okay, why are people buying property there? Are they stupid?
Yeah, no, I've been saying for years two things. One is precisely what you're saying, but I always say first, the idea of the Hamptons being underwater fills me with hope most of the time. But right, yeah, no, that's right. It's when you put real money on the table, that a lot of the BS goes away. Well, let's see. We're down to our last couple minutes. We always try to run these things on time. You mentioned that you're bearish on Wall Street and have appropriate worries about Biden. What are you optimistic about?
I'm always optimistic about the future of the country. I think the Americans made a big mistake. I think that, it was a big mistake. We're going to pay a high price for this election. One thing I worry about is, that I worry that when America turns left, as let's face it, this is going to be a left-wing administration. This is not a moderate administration. These are left-wing people. But I do worry that when America goes left, the rest of the world tends to be, just like under Reagan, one of the most important things about Reagan's legacy was the whole world moved right, because they saw his policies work. And so I do worry about that. But in the end of the day, like we're moving into a technological age that is going to be fantastic. I do think the virus is going to be solved in the next 6 months, and we're going to move into a period when we can get back to, everyone wants to get back to normal, and normal life. And this has been really devastating for kids, especially kids. It's been really, really troubling. And so I'm optimistic with, and it is an amazing thing when think about this, folks. I mean, 11 months, we got a vaccine. I mean, it usually takes 5 or 6 or 7 years for that to happen. So it's a real testament to the free enterprise system. It was capitalism, Steve. This is my last point. It was capitalism that gave us this virus. Operation Warp Speed, people don't understand this. That was not a government program, really. I mean, it was partly government, but it's mostly Trump saying to these private companies, we're just going to we're going to get out of your way. We're going to get there, all the regulations and red tape and barriers from the FDA and the HHS out of your way. Go to it. Give us this. And that's what Operation Warp Speed was. And capitalism was a wonderful thing. It was a race to see. And you know what? They actually had a profit motive. They're going to make a profit out of this. Yeah. The horror.
Right. Well, right.
They're going to make a profit for saving 15 million lives around the world.
Thanks to our guest, Steve Moore, and to Steve Hayward. If you like this episode, please tell your friends to subscribe to PRI's podcast on iTunes, Google Play, Stitcher, TuneIn, and now iHeartRadio and Spotify. And when you're on these platforms, don't forget to give us a big 5 stars. If you don't subscribe to any of these, you can still listen on PRI's YouTube page, youtube.com/Pacific Research 1. That's the number 1. I'm Rowena Ichon. Thanks for joining us. See you back next week for Next Round with PRI.